Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Taking a look here at Rndr token, seeing once more what's going on. I've been covering this a lot more recently because I get a lot of requests for it. There's a pretty big community over in our Twitter as well that are kind of following this also. And I have consistent updates here as well. So if you could do us a favor, just go ahead and follow us on Twitter there so you can stay abreast on all the important stuff, both technical and fundamental data regarding cryptocurrency. And it's a really cool thing to be able to interact with our community and everyone essentially across the globe. It's so much fun. So again, be sure to check that out. And also furthermore too, if you want to check something out, be sure to check out our most recent trade here. We took a good 61%. The trade's still open for our Bitcoin short from 30,500, and this is just kind of a video version of that. You can see that again on our Twitter there. Again, you want to become a better trader, cryptocash.tech is a website. You can join the likes of other fantastic traders, and of course again benefit from our signals. It's all part of the package there. Again, 61% in roughly 30 hours. All right, so check that out. So what we're going to do, we're going to update Rndr essentially here and kind of see what's going on. We're going to render us a new chart. That pun was intended, by the way. And we're going to just go ahead and take a quick look at, well, Fibonacci retracement levels, Elliott wave, and a handful of other things too. So let's go ahead and just get right in. First of all, the thing I always look at initially is the RSI. So RSI is a cool thing. There's 50 and 70 and 30, of course. Those are like the key levels. When you're at 50, it's a support and resistance zone kind of right in the middle. We can see we've been above 50 for some time, roughly the last week and a half of trading. We're now above 70, and typically the common rule of thumb is to consider selling when you're over 70. The key, though, is to ensure that the price comes back down below 70 first. So that's the confirmation I look for. We can see here that we bounce off of 70. That implies we could see further upside to retest this level. This could be the beginning of a cup and handle pattern. All right, could very well come one of these, which would make sense because we got a strong support level here at 0.382 at $1.70. It's a round number, $1.70 is essentially where the price action could come back down to fulfill its little handle pattern and then break out from there. Okay. So if you're not familiar with cup and handle patterns, of course, do your own research. It's pretty straightforward. It's a really cool candlestick pattern, though. I truly do love it, and it works very well in most cases, but it kind of looks like we're at the beginning there. All right, so that being said, that's kind of where we're at there. Let's go ahead and take a quick look at the MACD. It's converging, of course, as well. We are starting to plateau a little bit, so there's a chance we could get rejected here. My speculation, if I were to just be a gambling person, which I'm not, it's a big surprise, right? I'm a trader and I don't gamble. I think we're going to get rejected here and the price is going to come back down to 170. Just kind of feels like it, especially with the way the market's going right now. Alts haven't really truly been surging. This is one of the few that is. While it's good that it's not aligned with Bitcoin, it's still susceptible to that. If Bitcoin retraces to 27.4, just say to fill that CME gap and to go a little bit further past that support, Rndr should, of course, retrace. All right, so just be prepared for some massive profits to be taken, but also prepare for the price to continue further. It's a funny little thing there. So let's go ahead and take a quick look at Elliott wave and kind of see what this looks like here. So first of all, Elliott wave is nice because it kind of gives us a 1, 2, 3, 4, 5 pattern. Okay, and what that basically just implies is that if you go back here, basically it's establishing higher highs and higher lows, right? So this is a higher high, higher low, higher high, higher low. So in order for us to complete this next wave, this next high has to be higher than the previous. Okay, so in essence, we have to see the price go above that to fulfill that in order for this price action to come back down to bounce off these levels. But just say even if that weren't to happen, and that wasn't to happen, however you want to conjugate the sentence, you could see that the price action would come down here to potentially bounce off of $1.70, $1.54, and $1.39. So what I usually do for these situations here is I put those as my dollar cost average targets. Okay, so again, we may or may not get a higher price point here to fulfill that higher high, but even still, the likelihood of the price coming down to that level, that 0.382, 0.5, 0.618, is extremely high. It's a very common retracement area, which is why it's built into these type of indicators, okay? Taking a look at the 4 hour, let's go ahead and see here. This is a healthy continuation. You can see kind of up over pattern, have this nice little pennant breakout. Price comes up to retrace and consolidate right at the previous resistance. Big surprise, price comes up, back down to the Fibonacci retracement level and to retest the previous high. All standard stuff here. Very, very rinse and repeat, normal stuff. The thing I love about this is that we got a MACD convergence on the horizon. So there's a strong chance that we are going to break out, especially with us retesting this little level here twice. Because again, you could say that this is a little handle pattern and the price will come up to break and to continue higher. I have a good sneaky suspicion that we're going to see at least a retest this level here, but we got to break through this little $2.11 range first. So again, a closure today above 211 or just say 220 or higher would indicate further upside potential. We close below that today. I feel as if we should retrace back down to the 170 mark or somewhere in that range, very, very close to that range. Okay. Again, it would make more sense for us to establish a higher high first according to Elliott wave and come back down to retrace those previous levels. But once again, we got to wait for the candlesticks to close. You got to let it do its thing. Try not to get too premature. There's nothing worse than getting in here thinking it's going to happen, it's going to break out, and it goes to turn itself around. I'd much rather wait for the opportunity that may not happen than to get in and to potentially lose. Again, everyone has different strategies. I have a trading academy. I teach all this stuff, and I've been trading for about 17, 18 years now, and I can tell you that in my experience, it's you learn to become one with yourself and to learn to have good risk tolerance. And if you're new to that, develop that. Watch as much learning content as you can. I have private videos, of course, on our page there if you want to consider joining. But bottom line is it's definitely something that you want to try to work on. So here's the thing. With the Ichimoku cloud, it's conservative indicators telling us we have some bullish signs, but we're also kind of in a weird place. Unless the price comes up soon, the lagging span is going to intersect with the price action. If that does happen, that really tells us it's best we close our position and consider an alternative. Okay, so at this point, we've got a lot of bullish qualities, some bearish as well, but it really just boils down to waiting for confirmation. So to me right now, taking a look at everything we see here so far, even though we have some good buy signals here from our CC Golden Indicator, I would recommend waiting just based on the simple fact that a breakout, while it should occur, may not happen as well. Okay. Again, one of two things will happen. It'll break out, it'll come back down and consolidate at 220, or it'll reject at 220 and come back down to that 170 mark. To me, 170 seems a lot more of a juicier target than 220, okay? So again, I would just wait for retracement. It does look like we're also overextended here as well. While we are getting some periods of consolidation, overextension to the bottom, we come up to a 6, up and over, down to another 6. Even though we got a nice little reset, I think it's less likely we're going to see that. Again, you could also argue this is a cup and handle pattern here as well on the hourly. But once more, the larger time frames provide much more benefit for any type of candlestick patterns. So that's the summary there. I hope you were able to disseminate some positive information and it works out well for you. Once again, I ask you just a quick favor to go ahead and help us, increase our following on Twitter. Feel free to, tweet, like, subscribe, that whole thing. I don't know the verbiage honestly because social media isn't my thing, but I can tell you we're bringing tons of tweets to the community, and it's just awesome. We're in here interactive about 25 to 50 messages per day, and again, all you gotta do is follow, like, and retweet for a chance to become a community member here as well, and it's our Twitter giveaway there. So really cool stuff. Be sure to check that out in your own time. CryptoCash.tech is a site to register if you want to become a better trader. Hope you have a good rest of your day. We'll see you in the next one.